Putting in that international pain.
Yeah. Just driving, man. So like fucking a million scooters out here and mopeds and motorcycles. I'm like, God damn. Yo, there's no traffic lights out here, man. This shit is just chaos. Get me home, man. I'm fucking over it. Yo, I mess around and rented a car, man. I'm like doing Ubers from now on.
Oh,
Them trips.
you out there moving for real, for real.
Now, when I go to the resort, I always get a car just because of the pricing to get up and down. And
Yeah.
they can get you up there, but they're not allowed to like take you back. It's just these weird like
Conditions and all kind of crazy
yeah,
stuff.
there's a lot of you
Damn,
can't
that's
do
wild.
this out there.
That's wild. And you don't operate from that paradigm.
No, I don't, but I do know when you're on the road, ain't no cars coming. So, I can calculate that dumb shit.
Yeah. All right, so we live. We live over there, YouTube. What up, what up, what up? What's going on? We're about to get rocking and rolling right now. And hope everybody locked and loaded, strap in. It's game time. What's going on, ladies and gentlemen? Welcome to Dot Connect Wednesdays, episode 121. I'm Champ Bobbitt. This is Steve Bayonne. Steve's reporting live from Columbia. He gonna open up. He got some stuff for y'all, and then I got y'all from there. I'm gonna rock y'all out. Steve, what up, bro?
Hey, shit. Yeah, I came across this disclosure form, so I said, let me drop it on him. Champ's got you tonight. I'm done. It was really that call last night. So if y'all wasn't on the members only call, you might want to catch that when it goes up. That took everything out of me.
For sure.
Um, all right. Just drop a one in the chat if you're kind of new to the academy within the last 30 days. And then drop a 0 in the chat if you have any cryptocurrency on the exchanges. And just be honest about it. I'm not like, I'm here to just give you something, not scold you. All right, cool. Tiny bit. Got it. All right. So here's what I got for you guys. And we've had this before, just realized it wasn't in a lesson, so you may not even be aware of it. So a little while back, we had pulled the disclosures from Coinbase, Uphold, and crypto.com. And guys, it could hold true for any exchange that you're on. They basically have the same disclosure agreements. So I took it upon myself to just go through disclosure agreements, pull out the sections of where they talking about that you're not covered and they're not liable for shit happening. And I think I even told you where in the disclosure you could find it.
Yeah.
So I just need you guys to either believe what I'm giving you or do your due diligence and just know that it's kind of done for you already. All right. So inside of the comments, and if you're on YouTube, I don't know what we got to do. No,
Well,
whatever.
we
Well,
can.
yeah, come back to the replay and then you'll have the link in the replay for you to download. Really, it's an academy thing,
Mhm.
but we're just sharing this with anybody that's out there. You just need to know how much protection you have or don't have when you're doing business, right? So if last night you were on a call, I said that the old ways and the old rules are going out the door. So that means that we have to, one, we're armed with way more information than we had before. So we can't go into the new era just consenting to everything and not reading disclosures. Like that can't happen, guys. All right. So we drop it. And that way, for all you guys that put the 0 in there, you kind of understand why you shouldn't have things on the exchanges. And they're telling you this. This is their own words from their own legal teams that put together these terms and disclosures. And listen, I'll be honest. I was the guy that never read the ones from the bank, right? You open your bank account, you're ready to go. You get this big ass packet, keep it in the folder. You probably never even look at it. That one's actually more entertaining than this because that stuff is like, we're lending them money. It's not really your money. But either way, Champ's got you for the night. He's got a few good topic points. I'm pulling back. I'm just sitting quiet. I had a Michael Saylor thing, but I'm just gonna drop it as a crypto in 10 for any member. You'll be able to just get that in a crypto in 10 as part of your membership. So
Let's go.
What the fuck's going on tonight, man? And I could curse because we're not monetizing no more. So I don't care. What's going on?
Real talk. Yeah, man. Listen, man, tonight is gonna get real. You laid out, you done? You chilling?
I said I'm smoked, bro.
I bet. Shit, I got him from here. Let's get into it. In the words of my guy Steve, let's talk about it. All right, so tonight we gonna step into a moment where the world feels calm on the surface, but underneath the plates is shifting. The dots we're gonna connect tonight, this ain't hype, this ain't rumors. They're signals, and they're global signals that the world typically tends to miss right before history starts to bend. So Japan, this is something that Steve talked about on a previous Dot Connect. Japan's bond market is cracking. Bitcoin's liquidity is starting to evaporate and dry up. It dropped, if you've been paying attention, it dropped 9K within a span of 24 hours. MicroStrategy, there's a truth behind that. You know what I mean? That a lot of people just, they kind of swore that they would never tell. But we're gonna talk about it. We're gonna reveal it. And then Vanguard, the most conservative giant in American finance, they literally just opened up the gates to offer crypto after a decade of saying that they would never do it. This is choreography. All right. This ain't randomness. This is a rhythm of the system resetting itself. All right. So tonight we're gonna walk you through how global money is flowing, not with fear, not with confusion, but clarity, confidence, and precision. All right. So without further ado, let's get into it. First thing on the agenda, Japan. This is wild. All right. So, Japan, I want to connect the dots basically between what's happening on the other side of the world and why Bitcoin fell the way it did, right? In a matter of minutes. It truthfully didn't take 24 or 4 hours, but it happened without warning. A global liquidity event. And when you understand the moves. All right. So first things first, Japan's 10-year and 30-year bond yields just exploded to levels we haven't seen ever. So first things first, the 10-year hit 1.86%. That's the highest since 2008. What happened in 2008? The crash. Now, the 30-year just hit 3.41%. This is the highest ever in Japanese history. That's not normal, right? That's not a normal move. That's not a normal uptick. That's pretty much violent. All right. And that's the financial equivalent of a smoke alarm going off. And here's why it matters. Japan isn't just another country, right, with some debt. Japan is the most indebted major economy on earth. They got almost 260% of GDP. That means Japan absolutely depends on ultra low interest rates in order to survive. Think about it like this. When the yields shoot up like this, Japan's entire system starts to shake. Every 1% rise in that yield adds the equivalent of hundreds of billions in new interest costs. And then at the same time, Japanese banks and insurance companies, they're sitting on more than, I think it's 100 trillion right now worth of government bonds. And now they're deeply underwater. So this is an alarming moment, right? And on top of that, they're already carrying 100 trillion in yen in unrealized losses. Now, if those losses were marked to today's market, multiple mega banks and life insurance companies, they would literally go insolvent on paper. That's the first dot. Now, the second dot I got to connect is the yen carry trade. This is what Steve touched on, and he did a brilliant job. So I need y'all to double back to that dot connect and catch that segment. He crushed that. That's the quiet engine. That's basically supplying cheap global liquidity for 30 plus years. Investors, in essence, what they did was they borrowed cheap yen at near zero rates. They poured all of that money into US markets, European bonds, global equities, emerging markets, and in crypto. So, in essence, everything. Now, it was the single most important source of low cost liquidity in this modern day financial system. But when the Japanese yields started to spike, that carry trade absolutely blows up. All the investors, what they're forced to do is they have to reverse and unwind their positions. Basically, the sell you see right now that the yen is starting to surge. That's why volatility is up. That's why liquidity is starting to evaporate everywhere all at the same time. Now, something to remember, we did get a little spike, but that was because the United States just poured, I think it was like 1.3 trillion back into the economy. This is the most liquidity that they poured since that jab era. All right. Now, here's the third dot. A stronger yen basically destroys Japan's export economy. So you got to think about what companies are large over there. Toyota, Sony, Nissan, all of those got decline. The stock prices start to fall, confidence disappears, and it just creates more and more problems. So now you have bond losses, currency stress, corporate pressure, you know what I mean, from these big dogs over there. And then you ultimately have a potential banking problem. And it all happens at one time. And Japan only has three moves, right? Let the yields rise. That's going to make the system crack, period. You can either print more money to buy bonds, but then the yen is going to collapse. And then the third option is if they intervene, which is the Bank of Japan, if they intervene, trillions of dollars are going to get pulled out of global markets and it's going to go back into Japan, right? Every one of these options is going to drain global liquidity. And not just in Japan, this is global. All right, understand this. Now, this is where crypto ties in. The reason Bitcoin fell wasn't because Bitcoin failed or because of the ETFs. It was partial manipulation, right? Strategic moves, and I'm gonna show you in a second. But it mostly was about global liquidity tightening instantly. And crypto on Fridays and Sundays, the liquidity that came in and the record leverage, all of it was the first to get hit. Japan is the world's largest foreign investor. So when Japan de-risks, it all sells their US bonds, the European bonds, tech stocks, corporate debt, all risk assets, which is ultimately crypto. All right. And then that's how a contagion works. One thing happens, one catalyst happens, then it spirals, and multiple things get impacted and affected all at the same time. All right. So Japan, you got to understand that in the global realm, it's the stabilizer, and it's been that way for the last, I think, 35 years, right? Now it's starting to become a stress point. The anchor that was actually holding down these global rates in place for moving, and everything priced off that anchor has to be repriced with it. That's why the drop happened. That's why you're starting to see these moves just, they're hyper quick and they're instant. So this is why everybody must pay attention, especially crypto investors. All right. Whenever liquidity shifts, that's when you start to see opportunities. They are going to show up. You have to be able to spot them. All right. Not guessing bottoms, not just trying to time the market and understand the global flow of money and just position yourself before the rest of the crowd understands what they're looking at. Japan is the first domino, and it's the first domino to move. The rest of the system is soon going to follow after. Now I want to show you something. So I don't know why this thing is popping up on my screen. Hopefully I can't see that. So the first thing I noticed was, I'm gonna pull up Bitcoin so y'all could check this out.
So listen, just for context, while he's doing that, those Japanese bond yields, for those of you who don't know, because we can't assume that everybody knows every detail. They're basically, it's similar to ours. They're just interest rates that are paid on Japanese debt, right? So they make it favorable for investors to go out there to purchase them. That's the problem that the United States is having now, is they can't find anybody to buy these bonds. That's the stuff that holds together the government. Really, it's just a Ponzi scheme at the end of the day, if I was to like be honest about it. So you always have to have issuer, like the United States is going to be the issuer, and there always has to be a buyer for them. When there is not a buyer for them, then you don't have a way to really be paying your bills. See what I'm saying? So it's like they're printing money to then create another product to then raise money to pay the money that they owe. You see what I'm saying? Like, can you imagine if we had a printer in the house and we would just pay our credit cards with that and then keep using the credit card to then keep printing money? And it just hurts the economy at the end of the day. So Japan is on some bullshit too.
Real talk.
It's like we put out so much bad debt into the world that all they can really do is put out bad debt. And the wild part about it is it falls on our lap as regular people at the end of the day. So my question is, what are they doing with the tax dollars that they collect from paychecks every week?
Fucking it
I don't
off.
know. I'll be honest. If I was to change two rules in government, one would be term limits. You in for 4 and you out for 40. Like, don't come back. Or if you want to stay, your job at the end of your term is to balance the budget correctly. And if you don't, you're fired. You never come into politics again. So then that would truly put the interests of the American people first. Not and when you hear they sent money to Israel and they doing all this other shit, yeah, these countries are probably getting the money. But if I had to guess, that's the way that they're washing the money to get it back.
Mm-hmm.
Because no one could really follow the trail to Israel to actually know if that money actually did go and what it went for. They have contracts all over the world and their names are on these contracts and they're just getting kickback from it. So why wouldn't I send money to certain places that are going to give me money back into my pocket? I'm not saying I would do that. I'm just telling you, like, why wouldn't they play this game? So when you look at these people who have been in office that only get paid barely 6 figures, amassing hundreds of millions of dollars worth of wealth, it's just like, come on, guys. This is beyond a swamp at this point. It's all insider trading.
Facts.
To be honest, if we just all stop paying taxes, what do you think would happen? Game over.
Game over. So less bread for them to play around with. And that shit don't benefit us anyway.
You found a document? I was just trying to kill time for you.
Yeah. Nah, I appreciate you.
You got it?
Yep. All right, so I should be good to share. All right, so I want to show y'all this, right? So this is a tweet, and this is the outflow actual graphic. Um, these are the list of the companies right here who all dumped thousands of Bitcoin. So in the last 7 days, this started on the 28th of November, right? The peak was 92,596 that day, right? You had 24 hours later, it tanked. It started to tank. Everything started to go red. And then you had just this cliff moment. Everything dropped off. Now, when I looked at the outflows for Bitcoin, I looked and seen who were the outflows. It was Wintermute. They sold 9,300 Bitcoin. Coinbase dumped 8,300 Bitcoin. BitMEX almost 8,000 Bitcoin. Binance, they dropped 546,000 Bitcoin. I don't know if that's right. I think 5.46. That's almost 6,000. I think theirs wasn't as bad. You had Bitwise that sold 5,000, and then Bitfinex sold 3,700 Bitcoin. Now, all of this happened damn near simultaneously. This doesn't even include BlackRock sell-off. That's just these players. So this is like outflows that you can track, not ETFs. This is actual Bitcoin that they dumping. Now, here's what I want to show y'all. Look at this chart. So if you go here and you go last week, you see it right here. When that outflow happened, all of that started here. You was in the 90s. That joint went all the way down and lost $9,000 in value. That's a coordinated drop on purpose. What is this right here? This red zone right here. This is that quote unquote buy the dip moment, right? That everybody talks about. But that's for retail investors. What happened right here in this range right around here? That was the announcement of the liquidity infusion. That was just yesterday.
Hey, Chad, what's the date? That's all on the second, or that's between what dates?
That was between the 30th, really the 30th, in the afternoon, about 4 in the afternoon.
What day is that?
The 30th was, I'm gonna tell you right now, the 30th was on Sunday. That was Friday and Sunday's liquidity infusion. That joint was super low. So normally, whenever things was going on, so the Japan trade was all happening around the 28th through the 29th. That's when things hit that 1.18 mark, right? So the money was starting to dry up. So what did people start doing? They immediately hit the markets, they sold off, they got rid of risk adverse assets. They got rid of all the crypto, the stocks, things like that, right? That's when they had to go back into the yen. But then over the weekend, that made the yen even stronger. Now, yesterday, just right here, 12/2, what happened? We got the infusion. So this is what Bitcoin was looking like at 6:40 in the morning. And then boom, in a span of a couple hours, that was the news of that liquidity injection in the United States. Everybody went back into Bitcoin. Everybody went in. They was like, "Oh yeah, it's game time." We in fourth quarter. They started the quantitative easing, right? Which means now it's about to be more money that gets printed. More money is going to flow through these markets. These guys aren't doing nothing but playing ball. What you about to say?
$1.5 billion was liquidated between the 30th and the 2nd, right? So
Mhm.
this guys, this is why dates matter. These guys have been doing this for years now. They're all in on it. November 30th was a Sunday, you said, right?
Yep.
So November 30th going into December 2nd. Look at put your thing on. So that's that whole area right there, right?
Yep. That's right here. And in the second, this is 6 in the morning, right here.
So think about this. This is on Japanese time. How far ahead are they right now in time?
Let's find out. Japan from the US. 17 hours ahead.
All right. So think about it. November 30th, this shit started to dip, right? Right at the time that the Japanese market opened up early in the morning. $500 million was already liquidated when that market opened. So they knew this already. This is Sunday. They don't play in those markets. This is what I'm trying to tell you with this crypto shit. Crypto's open 24/7 and they know it, right? The markets don't get affected until they actually open the traditional markets until they actually open. These dudes, that's why I stopped trading like
Yeah,
daily,
leverage is a killer. Yeah.
right? So we're
Yep.
talking about almost $1.5 billion. No, $2.5 billion was liquidated within 2 days, 3 days. So when it started, it was the morning, it was Sunday, but it was
Yep.
the opening of the Japan market. And that's when almost $500 million, the minute that they opened, $500 million was liquidated. And then the rest happened from there. The Japan carry trade is everything that you need to read. And Bitcoin is just a vehicle that they're using to do bullshit.
100% facts.
That's why that shit is worth $100,000 because it has to be a strong enough vehicle, and 95% of it is controlled by government institutions, not retail. 5% is like retail. This is the instrument that they're using. That's why they're pushing Bitcoin as this saving grace. No, Bitcoin is printing them a lot of money on Sundays going into Monday and Tuesday. They do this historically every time.
Yep.
Go ahead.
100%. Now, the reason I even wanted to pull this up and show y'all, so one, y'all can see that leverage is wild, right? You literally rolling the dice. The cards are stacked against you, right? So do what you will with that information. But this is the most important part. This is the perfect segue into what I want to talk about next, which is MicroStrategy. MicroStrategy, the face of Bitcoin. So their CEO just came out on stage multiple times, and he basically was saying, listen, if the MNAV gets below 1 and we can't raise capital, we will sell Bitcoin. Now, that company was 100% always about never ever selling. It was always buy Bitcoin, never sell it. Now they publicly are coming out. The CEO of MicroStrategy came out and said this on camera. Not theory. This ain't speculation. I'm not guessing this. This happened. And he said it 3 different times in that same interview. Almost nobody seems to understand the gravity of this moment. For years, I told you that that brand is buy Bitcoin, never sell it, hold forever. But the CEO just literally told you what's going to happen if the math turns against him. So let me break it down like this, right? Because this is massive and this can damn near cause the Black Swan event itself. This is why timing couldn't be more dangerous for Bitcoin dominance. So MicroStrategy, they have no real revenue model whatsoever, right, to support the dividend structure that they promised investors. So how do they pay dividends, right? They use leverage, convertible debt, and then their Bitcoin. So if the market shrinks, the market goes down, which it just did. You've seen it happen from the 30th to the 2nd. If their stock loses premium, if the MNAV falls underwater, right, under that 1%, MicroStrategy, they're forced to be a seller. Forced, right? Because they will bleed, period. That's why they do not want Bitcoin to ever drop in price. They will continue to pump it and it will always be their marketing strategy. They are forced to make sure that you buy it because the moment you stop, the moment Tether gets caught up in some nonsense, whatever happens, right? The vehicles that they use that continue to pump this thing, if it falls and it hits that danger zone around 75K, the trigger that's going to be catastrophic for them is 73K. Anything under that level, MicroStrategy is underwater. And they're the largest corporate Bitcoin holder on earth. If they have to sell, it's going to get nasty in these markets. They hold 649,000 Bitcoin, almost 650,000 Bitcoin. That's over $60 billion worth of Bitcoin. So if it breaks below that threshold, literally it's going to be the largest forced sell event in Bitcoin's history. And I'm not saying this in any way to kind of scare anybody, but we always warned you guys about a Black Swan event. This could potentially be it. This could potentially be one of the largest moments that will cause that seismic risk to happen. So anything over 90K, it's no problem because they've been buying. They were doing dollar cost averaging in essence. But 75K to 90, now you're in a high stress zone. But anything 73 and below, it cooks. Everybody is going to get shaken out. They're dumping. No holds barred. And he said it and he affirmed it 3 times. So this is when you have to pay attention to detail, right? Because while everybody is focused on Bitcoin's price action, they're like, all right, it's fourth quarter. They're going to manipulate this price. Price is going to run up. This is the one thing that you got to pay attention to. He told you if we hit the 73 mark, they're selling. But you have to also remember this. BlackRock was the largest Bitcoin holder when it came to ETFs, right? You had institutional liquidity that's no longer a single asset. Now you got ETFs that's in other cryptos, HBAR, Solana, XRP, ETH. There's other ones that are existing right now and starting to materialize. So people are starting to rotate not out of crypto, they're rotating within crypto, but they're moving from that single asset dominance that Bitcoin holds. Now you're starting to see that migration. Everybody is starting to move in a multi-asset utility, right? And this is where you start to see like how the other ETFs are starting to position themselves. Right now, the eyes are heavy on XRP, right? And I'll get into that in a second. But you got Ethereum being used for smart contracts and tokenization, right? You got Solana that's just heavy on the throughput. So that's why this is the ETFs that are kind of right now like in the spotlight. But now you're starting to see that it's about the money movement. It's about what people have pent up demand for. And for years, it's always been XRP. So now this is why it's in the spotlight, and everybody is starting to rotate like, all right, Bitcoin was first. Bitcoin was all we had access to. If we weren't physically holding crypto, we were just getting it from the ETF side. Everybody's starting to migrate. Now you're starting to see it. But in that same flow, here's where you got to kind of take a step back. MicroStrategy this whole time. They were the hero during the bull market, right? But when the market starts to shrink, they literally become the black swan, right? So this ain't doom, this ain't fear. This is just one of those things you have to pay attention to the shift and you have to watch it as it's happening. Because the moment this joint gets under that threshold, it's gonna get nasty, right?
Listen, let me. I'm done after this, but this was part of it because this is a good segue.
Mhm.
Michael Saylor was 34 years old during the dot-com era when he started this company, right? Well, when he got involved in tech, right? He was 34 years old, guys. Put this in perspective. His company was worth about $7 billion. They were calling him a genius back then, right? He lost $6 billion in one day when he was 34 years old. Listen to this lesson and watch how history repeats itself how many years later. He was overstating his earnings. This is what's happening with all this is just what happens on Wall Street, right? So he overstated his earnings. He got charged, the company got charged by the SEC. He's 34 years old. He shouldn't even be allowed to like come back into the markets again, right? The stock collapsed, right? He lost $6 billion. He lost 99% of the company. And $6 billion of his personal net worth, guys, was wiped out. I saw a quote from this guy where he said he went from being the smartest guy on Wall Street, right? Young, killing it, to an example of why you don't fight reality in using like an old system, right? So Michael stated the financial system, this is what he said when he's 34, after losing everything, he says the financial system is a house of cards that's built on inflation, illusion, and manipulation. He's back at it again for round two. He said if you hold your value in dollars, you're guaranteed to lose because of the way the market is set up. He has to be the chosen one on this one. Because there's no way you're going to allow a guy like that to recreate the same mess that happened before as if nobody would pull up the receipts. And if that's not a exercise in white is right, shit, I'm done. Shalom.
Nah, that's real shit, man. And I'm not laughing because of the situation. I'm laughing because it's some bullshit. It's like all of the hurdles that people have to go through to be able to amass any kind of wealth in this country, right? That's all about fucking consumerism. You know what I mean? They only allow that shit with certain parties, certain players. But when it comes to the counterparts, it's always bullshit. But these guys can fuck off billions of dollars and they brush it right under the rug. You just, mark it as a loss, rebrand, come right back out, and everybody's trusting you again. This shit is wild, man.
Crazy.
Damn, that's wild. Yeah, he's bugging, but that's just something I want y'all to pay attention to and watch out for. Because at any given moment, the shit can happen. And we got a new player, which is the wildest shit. I wasn't expecting this. So a couple months ago, Vanguard. If anybody knows who they are, drop a one in the chat. So Vanguard yesterday on the 2nd of December. This is one of the biggest structural shifts that we ever seen in crypto, especially with XRP, right? So yesterday, the second largest asset manager in the United States, they flipped the policy and said, listen, now we're opening up the platform to crypto ETFs. Vanguard has $11 trillion in assets under management. They're the number two player right now behind BlackRock. They literally just came out and said, we're unlocking access for Bitcoin, Ethereum, Solana, XRP, and HBAR. That's the one that kind of was under the radar. A lot of people wasn't paying attention to. Now, Vanguard, if anybody knows, Vanguard always said this. They're like, listen, Bitcoin is not it. We will never, ever have this available whatsoever. And I guess they're starting to see that the demand, they see the way the market is shifting. Now this is like a big dog play for them, right? Because think about this. They manage, I put this in a perspective, right? These guys alone in the United States have 50 million US investors. Like these are retirees, professionals, index fund users, pension accounts, 401ks, all that stuff, right? As of yesterday morning, 50 million Americans now have access to regulated access, right, to XRP ETFs right inside the account that they use every single day. I created an account, I looked it up, I verified it myself. You literally can see all the ETFs existing right on Vanguard's app, and anybody can have access to it. So you don't have to open up no additional exchange, no nothing, right? You literally just click on whatever ETF it is you're interested in, you click buy. So as of today, right, I had to double back and check numbers. $744 million worth of XRP, right? And I want to make sure this is loud and clear. $744 million XRP is at $2.20 per XRP. So that's 337 million tokens, roughly. Like we're gonna round it down. It's 337 million. That's by ETFs, and that's in 9 days. Just nine. So you remember on Docunet 120, I was talking about the supply shock. I was talking about how fast these institutions, now that they're here, they're giving access to more people. And now more people means more capital coming in because it's been pent up demand for the longest. Some people are still scared, so they don't want to hold the assets themselves, but they will sign up for these ETFs. And in the ETFs, the way all of them are structured, you have to buy the actual asset, which is why it's kind of pointless for people to have ETFs. But hey, if you scared, you scared. You just don't want to dive in. I respect it for the time being. But this is why everybody who's directly holding XRP and other assets and stuff like that, when in creating these ETFs, you're the ones who have the full control. You know what I mean? Because at any given moment, something can happen with the fund, whatever, right? But you control your own destiny. You sell when you want to, you buy more when you want to, but for the most part, you buy, tuck it away. It's on your cold storage wallets. But let me stay focused. The XRP spot ETFs, it's only been 9 days of trading, less than 2 weeks, and they did 337 million. $744 million worth of XRP in less than 2 weeks. That's over 1% of the circulating supply that's available. They accumulated that in just 9 days. And every single day, the demand is increasing more and more. And then just yesterday, Vanguard, who has 50 million more people, just got added to that pot. So now you got 50 million more people who haven't even purchased yet. It just became available. So some people still dragging their feet, but every day that demand is going to keep increasing. That's not normal, right? And this ain't hype whatsoever. But what I'm looking at is institutional and retail accumulation. And it's happening faster than any of us expected. So now that you're starting to have the big dogs to come in, what do you think is going to follow? More big players. So if you got Vanguard that's here, you're going to have BlackRock that's going to start their ETFs. You got State Street, you're going to have Citadel, you're going to have Fidelity, you're going to have all of these players start to line up. And what are they going to offer? The same ETFs to their customer base. That's going to be more demand. That also means all of the supply that's on the exchanges is going to dry up. All of the supply that's on the OTC desk, the over-the-counter desk, that's going to dry up. And then dark pools. Dark pools is a gray area. It's a tricky spot, right? Because you don't know what the dark pools have right now. It would have to be somebody who's like tied in on an institutional level, who like is a big dog, who has these type of conversations with governments or these big behemoths, and they're able to kind of give you insight just through their conversations that they're having. But a lot of that stuff comes with NDAs. So just to give you a overarching of it, the only thing that you really can see is what's on exchanges, right? You can see the inflows, you can see what they have on their books right now. Um, all of that stuff is available on a blockchain. If you just track let's say a Binance wallet, Binance had like, I think it was 4.5 billion XRP on their books. Now it's down to like 2.9. So just on Binance alone, they've sold over a billion XRP already. So it's like that's the type of stuff that you have to pay attention to. But when it comes to dark pools, like I said, you don't know what they hold. So as the supply continues to keep dwindling down, what you're about to start seeing is exchanges are going to start to run out. And even when they don't go to zero, what they're going to do is they're just going to pool the availability for you to even buy it on open exchanges. Now, here's why. When you think about this, an exchange is what? It's a place where you would go to buy and sell your crypto, right? If exchanges are making money off your transaction fees, that's a plus for them. But now think about this. When you have these, let's just say, use XRP for an example. When you have XRP, and let's say XRP goes from $2.20 right now, let's say it goes to $5, $10, $20, whatever. Now, all of the XRP that Binance is holding, do you think they're going to want to offload that right away? No. It makes the exchange more valuable by having actual crypto on their books. So what they're going to do is they're going to just stop allowing it to be in circulation. Those blockages, that's going to increase the demand because now everybody is going to want XRP. It's not going to be available to everybody. So what happens? Regular economics. You got high demand. You don't have a heavy supply that's out there available to the people. The price is going to shoot up even more. And that's what these guys buying up like the way that they're doing. I told y'all in 120, I gave the super breakdown. If you watch what's happening right now, I know I'll probably undershot by months. I said, look at the numbers by a year. I probably give it about 6 months, 5, 6 months. And I don't like to give times because anything that's planned in crypto, it's like it's always like a a reversal. You know what I mean? Like you anticipating something going up. There's a set date in crypto. It's going to tank. It's going to go the other way. But with this, I just got the foresight for this. Just seeing the demand that's increasing every single day and the amount of supply that's on these exchanges right now, and I'm watching the numbers continuously fall. We're about to have a supply shock moment. So the same financial advice. We're not financial advisors. Just telling y'all, especially if you're a part of the academy, everybody who've been supposed to, buying your cryptos and you kind of sitting on your cold storage wallets, get your crypto. Steve already gave you the document at the top of the call. Like that's their disclosure statement. Listen, get your crypto and get that shit onto your cold storage wallets and protect it. Sit tight. That's all I got for you. All right. So understand you got big dogs that's here in the building and it's going to be more to follow. So Vanguard, they were the most conservative giant in traditional finance. When they flipped from no crypto to now full-on access, that should tell you one thing. Like the migration to digital assets is already here. Now they're about to speed up mass adoption. They're about to do this intentionally. So the resistance is pretty much over. Floodgates is open. You got BlackRock on the way. They open the door pretty much with the IBIT and all that. But now you're about to start seeing them offer even more ETFs. All right. I'm not going to speculate, but I did see a couple assets and ETFs that they are trying to launch. So, we should be getting some news on those releases coming up super soon. Vanguard just flipped. And then now you just got everybody who's sitting in that whole retirement system, you know what I mean, with the second largest asset manager in America. Now they got access to it. So this is a huge turning point. So tonight, if it showed you anything, markets don't move just off headlines. They move on pressure, on liquidity, on the silent decisions of various nations and institutions. Japan stress, that wasn't a local event. That was global, right? It was the tremor that was felt across the world. MicroStrategy, that wasn't a slip. So make sure, and I'll share this with everybody that's in the academy. I'll share the clip so that you guys can actually see it for yourself. And you can watch that whole interview if you want to, but that was the most important part. Those words from that CEO wasn't a slip. That was a glimpse into real risk and what's going to happen if we ever hit that threshold. And in Vanguard shift, that wasn't convenience. That was the signal that the final wall, the final barrier is falling. All right. So every time you see a rearrangement, it's going to create an opportunity. And it's only going to be for those who can see it early. So tonight wasn't about fear, it was about insight. It was about positioning. It's about understanding the flow of money, right? You're here for a reason. And you don't wait for headlines. You look beneath them. You show up here to connect the dots with us. And this is what separates the passengers from the architects. So until next week, we'll see you guys on 122. We got a couple crypto and tens we're going to release for y'all, give y'all some more heat. So until then, stay aware, stay dangerous, stay attentional, stay sovereign, because the world isn't slowing down, and neither are you. All right? That's 121. We out.